The stock market has been on a wild ride recently, leaving many investors wondering what's causing this decline and is there hope for a rebound. Stay tuned as we break it all down for you on Financial Futures 101. Hello and welcome back to Financial Futures 101. Today we're diving into why the stock market has been declining and what it means for investors like you. Let's get started. The first reason for the recent market downturn is portfolio rebalancing. Back in early December, U.S. fund managers had a 99% exposure to the stock market. This extremely high exposure created vulnerability in the market because any significant reduction in holdings by these fund managers could trigger a sell-off. While high exposure doesn't guarantee a correction, it certainly increases the odds. Historically, we've seen that similar levels of exposure often come before a market pullback. The good news? Recent data shows that fund manager exposure has dropped significantly, signaling a healthier phase of consolidation. These reduced levels now resemble periods in 2024, specifically August, April, and January, which turned out to be excellent times to invest in the market. This brings us to our first takeaway. The recent correction might have set the stage for the next leg of the bull market. During this period, S&P 500 earnings estimates have continued to rise at an impressive pace, similar to the late 1990s. That era was one of tremendous growth for the stock market, and the current earnings growth suggests we may be in a similar phase. Now, let's address the second major factor behind the market's volatility: rising interest rates. The U.S. 10-year government bond yield has climbed significantly in recent months, putting pressure on stocks. This rise in interest rates impacts the market because higher bond yields make treasury bonds more attractive compared to riskier assets like stocks. Investors often reallocate their capital during such periods, causing temporary corrections in the stock market. If we look at past trends, every significant increase in the 10-year yield has eventually been followed by a reversal, sparking a strong stock market recovery. Currently, the 10-year yield is hovering around 5%, which aligns with the U.S. GDP growth rate. We don't expect a sharp rise in GDP growth anytime soon, so interest rates are likely to stabilize near these levels. A small increase to 5.2% is possible, but a major spike seems unlikely. Once rates reverse, we anticipate a sharp rebound in the stock market. So what does all of this mean for investors? We believe this period of correction and consolidation is creating opportunities. While short-term volatility may continue, the longer-term outlook for stocks remains positive. In fact, we're already seeing constructive technical signals. Unlike 2008 or early 2022, when moving averages were trending downward, we're now observing upward momentum, suggesting that the bull market is still intact. Now let's pivot to another exciting opportunity: gold. Gold has entered a new bull market, breaking out of a long-term consolidation pattern. Recently, it bounced off a key technical level, signaling strong potential for further gains. We've seen similar patterns in gold mining stocks, which could outperform significantly in this environment. If you're looking for strategies to diversify your portfolio or take advantage of these trends, gold might be worth considering. Its recent strength provides a hedge against market uncertainty, and the technical indicators suggest it's far from running out of steam. To wrap things up, the recent stock market correction has been driven by portfolio rebalancing and rising interest rates. Reduced fund manager exposure and stabilizing interest rates point to brighter days ahead for the market. Gold is emerging as a top performer, offering opportunities for those looking to capitalize on its momentum. If you found this breakdown helpful, don't forget to like this video and subscribe to Financial Futures 101 for more insights that empower your financial decisions. Your support means the world to us, and we'll see you in the next video.